Welcome back. So far you've been able to know the basic workings of insurance. You've also been able to learn how to secure your motor vehicle insurance. So once you're ready to get your insurance, now we are down to the practical aspect of what are you supposed to take as the next step from here. So first of all, you need to fill in a form. This form is referred to as the proposal form. For the proposal form, this is where you fill in your personal details, the vehicle details, the use of the vehicle, and also additional information, which helps the insurance company better understand you as a person and also better understand the nature of the risk involved with your vehicle before issuing you with the insurance cover. So once you fill in this form, a lot of people forget or rather prefer not to fill in the form and give another person to fill for them. But it's always recommended at all times, fill the form yourself. In the event that you have challenges, maybe with the terminologies or the nature of the question, it's always good to consult a professional person or another experienced person within the industry to guide you such that you don't make a mistake filling up the form and have future challenges. Let's say in the event that you want to claim or your cover being suspended or cancelled, since it's considered as a fraud that you lied about particular conditions relating to your vehicle. So once you fill in the form, you also need to submit some of your documents. So the key documents required by the insurance companies at all times are your KRA PIN and a copy of your logbook and copy of your ID. And for the ID, if it's a company, you also need a copy of the registration certificate for your company. So these documents help in compiling your file at the insurance company. In the event that you have a claim or in future challenges, the insurance company is a better position to understand you as a client. They have your documents to verify you. They have the documents of the vehicle to verify particulars of the vehicle, such as the chassis number, engine number, color of your vehicle, the make, and other details are related to your vehicle. So once they have this documentation in place, you then be prompted now to pay for your insurance. Common practice is that if you need to pay for your insurance, request for a pay bill, which can be able to be verified, pay through the pay bill. And if it's through an intermediary, always confirm that after you've made the payment has been submitted to the insurance company. So after you've made the payment, your intermediary or the insurance company then has the duty to ensure that you're issued with your certificate. So in the event that it's a third-party insurance certificate, you can purchase it immediately for a 1-year cover or a 1-month cover as you prefer. But if it's for comprehensive motor insurance, common practice requires that if it's for the first time that you're purchasing this insurance, you will be only able or required to pay for the first month. In the first month insurance, in terms of the comprehensive, it's estimated as a percentage of the total amount which you're supposed to pay. So if we go back to early example, let's say our vehicle value was 1 million. We were supposed to pay 5%, which was 50,000, and then we add in the levies. So once we get that amount, we just can't go and pay all of it at once to the insurance company and get an annual certificate. But the main reason here being this value which we are saying for 1 million has not been verified by anyone as the true value of the vehicle at this particular time. So it's best once you pay an estimate, which is, under most circumstances reaches a maximum of 40% of the estimated annual payment. So let's say our total payment for the year was 50,000. We do 40% of that, we get 20,000. We'll only pay the 20,000 now. We are issued with a 1-month certificate and a letter to take the vehicle for valuation. So after valuation, the valuer will give the vehicle its market value. then we'll recalculate again. So in the event that we said our vehicle was 1 million, but now the valuer said this vehicle is not 1 million but 1.2, or it's not 1 million but 900,000. So we need to recalculate again, get the annual insurance, then subtract what you had paid for the first month, and once we get the difference amount, pay the balance and get your annual comprehensive vehicle insurance. And also in the event that you don't have money to pay for the annual, you can also pay another installment again and get another extra 1 month. Then after the 1 month has lapsed, pay now the balance, the remaining balance, and get an annual certificate. So in most circumstances, if purchasing comprehensive insurance, you can pay using a maximum of 3 installments. If you need to pay with more than 3 installments, you need to get an extra loan from the bank, which is referred to as the insurance premium finance. So this requires an additional interest, which will be charged on your premium, and you'll be able to pay the bank in installments, but the bank will pay the full amount upfront for you. So the way the IPF works, you fill an extra insurance premium financing form, which is signed both by you, your intermediary, and the insurance company, and then issued to the bank, who then sign and agree that this is the total amount of premium you're supposed to pay. They pay the whole amount to the insurance company, and then you're left paying the installments. So the bank might request you to give them 10 post-dated checks, with one being current. Once they bank the current one, they pay the insurance company, and from there, every month they'll be deducting the amount now from you. In the event that you fail to pay the bank has a right to call the insurance company and request for your insurance to be cancelled, since you didn't pay them their premium, and rather the loan for the amount which they incurred paying for your insurance premium. So it's always good and common practice for you to make sure, in the event that you've taken a loan to pay your insurance, at all times honor it, because even if you have the certificate on your windscreen, if it's cancelled, in case you have a problem, you won't be having any insurance on you. And also good to note, if you default on the loan, it works as an ordinary loan, so it will always reflect on your credit score, which might future on affect your credibility when going to borrow for even different activities. With that being said, now we have a total overview of what it takes to purchase insurance. And now the best thing we can be able to do now is to jump into the more practical aspects and look at a sample proposal form, and look at how to fill it, and then look at actual rates and how we may be able to calculate our insurance premium. So with that, see you in the next class.